What's up? It's Monday. What's popping? Market is just opening as I speak, and it's going to be a big week here. So, we got a lot of companies, some big companies, they have their earnings this week. And so, earnings is a big indicator, right, on how we can see on if the markets are going to be pretty bearish, pretty bullish. And so, there's a big sentiment change when these large companies do well with their earnings or they don't do so great. So we're going to dive into that. We're going to understand, hey, what are the companies? And so I'll name a few. You probably know some of these. These are like Apple, Amazon, Coca-Cola, Microsoft. These are the big players in the game. And then so the reason why we're going to talk about this today is because this has a big bearing on what happens with Bitcoin and the rest of crypto. As we know, the correlation is almost one to one, it seems like. And so as we dive into just really understanding the market, we're going to really take some time to see how these earnings affect how things are going when it comes to the ebbs and flows of crypto. And there's also some other things going on as well. So the Fed, they have their meeting, and so we're going to see if we get another interest rate hike. So we'll talk about some of the projections, and I'll probably be live as well. So we'll watch that live. I believe it's on Wednesday, and so we can all gather together here if y'all want and watch that. So I'm looking forward to it, guys. So I'm really excited because we're at a time and period to where the people who are paying attention, people who are putting in the work, we're going to be the ones that are, basically writing our ticket to the life that we want to live. And it takes us work. And I've been willing to put it in because I just know what the outcome is going to be when you are consistent. And that's the thing about anything, guys. I just kind of want to remind you, because I always remind myself, is the way that you get to the place you want to go, right? So first you got to have that goal. Okay, what is the goal? Write it down. You think about it quite often. Dream about it. Outside of that, it's like, okay, well, you create a process. How do I get there? You might start a process and it might start to change through time, but you just improve that process. You take information, you get the experience, all this kind of stuff. Other people come into your life that can help you, right? So that's kind of what I'm trying to do, and collaborate with you guys so we can all help each other with our knowledge, especially if we're all going to be talking about crypto here, is moving forward with our process and really dialing it in to where we can get the maximum benefit to where we're trying to go. And so, and it's really about just knocking it out. That's the consistency about being able to do something week in, week out. Sometimes you don't feel like it. Sometimes it's just like, all right, man, I feel like I have brain overload. Okay, cool, relax. But then kind of come back, refresh, and get going again. Sometimes you're tired. I know we have a lot of responsibility, but if you're serious about crypto, it's you really got to set yourself apart. No one gets where they're trying to go by being average. I do know that. I've got a lot of experience in basically saying, okay, what is the goal? Achieving the goal. Cool. Okay. Did I perform well with that? And so I pride myself on doing that in every aspect of life. So when it comes to crypto, I have the same mentality, just as if I'm, playing ball or whatever the case may be. And then so the mentality behind becoming proficient in something or proficient in anything is that consistency, and it takes the motivation, and it's a daily grind. And then so not saying that you got to sit up here and watch YouTube videos all day every day and look at charts all day every day, or any of that, or just look at crypto every day. But nonetheless, the more that you can compile together for yourself, it'll expedite your expertise. And so the goal is to become an expert. And so I even want to look into the definition of expert, because I really think that's just what it takes. It's like, don't expect to have a successful outcome with minimal effort. And I want to come at y'all with a real take this morning before I get started looking at all this stuff, because I think it's necessary. I think talking about this stuff in this way is a asset to being able to get our mind going in a positive way, but also an efficient way, instead of just saying, okay, what's going on? What does this chart say? What's going on in the news? All that stuff can be very mundane if you're not looking at it with the right lens, saying, okay, look, I'm gonna take this piece here, take this piece here. How does this fit into my plan? And then go execute your plan. So that's what I'm trying to do here, is just be a presenter, a PA system that can help everybody, including myself. Because as I'm doing this stuff, I learn, and I take all this stuff and then execute it for my plan, because I know where I'm going. And this rocket ship is it's out of here. Like it's going there. So I'm hoping that we all can get our own personal financial journey. That's a rocket ship, and crypto is going to be that vehicle, guys. It is. We know it, and so we're gonna, just formulate this stuff and get going. So cool. Let's get into it. I do want to start off with talking about some of these companies, but really quickly before I do that, let's say what's up in the chat. Got my man Wade. So that this is what it's all about, consistency. I see Wade in here and his dog all the time, right? So glad to see Wade. We got Brian back in the chat. What's up? Got my guy Ted. Let's go. It's another day, another opportunity. Cool. We got Juice. What's good? What's popping? All right, so let's get into it. Now that we kind of got our bearings, we see what's going on. Oh, let's go. We got Karin in the chat. What's up? So, man, I'm excited because the markets are opening this Monday, and we got an action-packed week coming up here. So let me share the screen. Boom. Okay, so I'm gonna start here. So, and you know me, guys, I'm all about linking information. So I'm always gonna shout it out, say, hey, cite my sources. I'm not just saying stuff that I just think. Sometimes I give my take on opinion on the back end, but I'm trying to give you guys pure empirical facts and current facts and things that we can pay attention to. So right here is Investopedia.com. If you guys have never, if you're throwing money into crypto, you're classified as an investor, right? Despite whether your beliefs on if you are just a Bitcoin only person or just whatever it may be. But when you put money into something and you're wanting a return on it, which I believe that's what most of people are doing here, you're an investor. So going to Investopedia.com is helpful because they got some education links, and then they even got some things very specific, so specific to crypto. And so if y'all haven't taken a look at that, go for it. I would really encourage it. But also, they do have this information here, and so this is the top 25 companies in their percentage weightage of the S&P 500. So the S&P 500, if you guys don't know, are the top 500 companies in the United States, and we know the United States is the powerhouse when it comes to economies globally across the world. And so it's important to get very fond, get very, very fond with these top 25 companies. Typically, within blocks of 5 to 10 years, it doesn't shift too much. They stay within this realm of whatever you want to call it, of dominance, of these companies continuing to produce and have significance in our society. And so, I see this as interesting because we're in a different age than maybe 20 years ago, right? A lot of these companies were not here. Some of them were, believe it or not, right? Some of these older companies that have staying power. So these banks, for example, like Bank of America, right? Chevron, they've shuffled up and down. So kind of like when you're looking at Coin Market Cap or CoinGecko, and you're looking at some of these coins, and you see, okay, well, what are the coins that have staying power? And then so I like to do this exercise because it allows me to see, okay, some of these companies that have been around for a long time, they have staying power. Well, what is their value proposition and why they're continuing to stay in the top? And so when you invest in something that is continually providing that value and has a use case in life, right? And so especially in crypto, just have a use cases, do something. And we're going to talk a little bit on the back end about, is this really a cryptocurrency, right? And so taking out the middleman is a big part of that. If you look at the white paper, it's supposed to be peer-to-peer transaction. And even Bitcoin sometimes is more so held as a store of value, not so much as a mean of commerce of utilizing that coin per se for value of exchange, but more so storing it, which I think that's a better use case for it. But anyways, we'll get into that on the back end. But let's dive into this really quickly. So getting to know these top 25 companies. So I'm going to start ringing some of these off, and mentally in your brain, it's like you don't have to write them all down, but just kind of when you hear these names, just know, okay, I need to subtly kind of pay attention to what's going on here, because when they shake and when they move, when they have good news, bad news, it affects all of this. It affects the whole SP 500. So SPX chart gets affected when these companies have things that happen, and so earnings is a big part of that. And so earnings is like the revenue that that they have coming in and say, hey, this is how we're doing. It's like their progress report. So just like, when we're all in school and we get that progress report, we're hoping that it's good, right? I just know when I was a kid and my progress report wasn't looking so great, you had to go and tell your people, right? Go tell your parents. You already know, things may be going down, right? If it ain't good, I just know that's how it was for me because my parents had high expectations for me. And then so in the same way, right, when these companies come to the market with their progress report, if it's not good, guess what? Things sometimes going down, and that's even as far as price goes, right? And then so either I hope that analogy was kind of helpful, but either they're going to beat their projections or they're going to lose out and come under their projections. And so Apple, they hold a good portion of the S&P 500, right? About 7%. Apple, Microsoft, Amazon, Tesla. So Tesla, they've already had their earnings, which they were okay. They weren't exceedingly great and they weren't exceedingly bad. Google, so they're Class A shares and the Class C shares, right? So if you notice what's going on here, and Nvidia, just look at top seven. All of this is some form of tech. Amazon is a little bit more commerce, right? But nonetheless, they use a lot of tech. I believe that, if you want to look at websites that are actually visited, Amazon is in the top 5 websites that are actually visited on a day to day basis. They get a lot of traffic and they wouldn't be able to do their business model if they didn't understand the tech game. So Amazon is a big, big player within tech. I know sometimes we don't see it that way, but they are. But these top seven, right? And we know Google, the top search engine, for quite some time now that we're all using. And I would also add that they know our whole lives, right? So these companies right here, most people have an iPhone, Microsoft. A lot of people have computers, right? So I'm even on an Apple computer as we speak, and I'm sure you're on an Apple iPhone or Samsung, Amazon, Tesla, right? And Google. These companies right here, they know almost everything about almost everybody, age, all kind of stuff. And there's an aspect of security that we don't have because of these companies, and so there's some centralization with this stuff, and that's why crypto kind of helps us out a little bit with some anonymity there when we're doing it the right way. But yeah, man, these companies have a lot of power, and I don't know if we know that or not, or if we realize that or not. But yeah, so Nvidia, right? This is a big company here because they help fuel the tech sector. And then what do you have here, right? So you have Berkshire Hathaway, Class B shares. Warren Buffett and his crew, they've been doing well for a long time. They've built up a hedge fund that, has a big stake in what's going on in the market. Facebook, Meta, right? Now here's the interesting one. We have a different category here, United Health, and then you have Johnson and Johnson. So now you're getting into medical and medical research. And then you have more banking, more financial. So JP Morgan Chase, Visa, and where's MasterCard? I think MasterCard is a little bit lower down, but Visa right there. Procter and Gamble, have some oil, right? With Exxon, Home Depot, Chevron. Here's MasterCard, like I mentioned before. Bank of America, financial. AbbVie, Pfizer, Broadcom, Costco, Walt Disney, which is entertainment, and Coca-Cola, which we know they have a suite of different products. And so I wanted to come here and dive into this and understand that, okay, like these companies are a big deal. So learn them. If you have to, write them down and allow these companies to help you understand the ebbs and flows. And so when we come back to crypto and we see things are happening within these companies, if we're seeing good things that are happening and we're growing, especially in a period of economic growth, which I would say, contrary to that, currently we're in a period of economic contraction. Understand that there's reflexivity within all markets. And so they are all playing off each other. And there's people in the middle. So we're talking about sovereign wealth funds, hedge funds, large players, right? That they move and they move liquidity between risk on, risk off. This stuff in bonds, right? But the premier value storage has left gold. It's no longer in gold. Gold is still up there, but it's more so in equities, bonds, and then now crypto is slowly starting to come into the use case of good store value. And so, knowing this stuff is important. And the reason why we're talking about these companies is now going to the next thing. So, these companies right here this week, this is what's going on. So, y'all can go over to Earnings Whispers on Twitter. And so, they have a lot of this good information. And so, we're going to see what's going up this week or what's going down this week. And, going down is not necessarily a bad thing if you're looking to accumulate, right? Going down is an aspect if you have a strategy of how you might be able to get a nice swing trade in a bear market, and take advantage of that because we know that there are these rallies within a bear market. So if you know what you're doing, you can take advantage, or nonetheless, just be able to get stuff at a good accumulation zone and just hodl. So okay, back to where we are. So Monday, not too many large companies with their earnings report. You do have companies like Whirlpool, Philips, Logitech, companies that you may or may not recognize. But outside of that, Tuesday, Wednesday, and Thursday, these are the big days that we got to have our eyes peeled, head on a swivel, because we know it could be going down or going up, right? And so we're talking about Google here. So that's Alphabet, Microsoft, Visa, Coca-Cola. So those are the big four on Tuesday. And then so three out of the four are after the close. So, maybe in post market, once that kind of finishes up Tuesday, we can kind of see what's going on there. But same thing, we have other companies that are still pretty large for their particular sector. And so UPS is large for their sector, right? Chipotle and McDonald's, these are all recognizable companies that a lot of us know and love. I know I love me some McDonald's, right? And so, these are companies that we also want to pay attention to as well. Like I said, we don't have to sit there all day and stare at the chart, but open up a news clip, say, okay, how did they do on their earnings? Positive, okay, and that'll give you an idea. And then it's just literally taking majority. If majority are doing pretty decent, then that's a good sign. And we're going to really focus on the large companies. If majority of them are coming below their earnings projections, look out below. May have some sentiment change with the markets. And so we know, a lot of this stuff is bent on sentiment, how people feel about the market and trying to get ahead of where they think things are going. And so Wednesday is another huge day. So we have Facebook, right? And they're going to be doing their thing. So they're going to be permitting or presenting their earnings after the close. But we also have large companies for the sector, right? Shopify. So for e-commerce, Shopify has been a big grower. They've been taking a big hit, just like a lot of, I'd say tech, right? Because same thing, they have a website that people have to go to. So I would kind of bash them in with tech in a sense. But we also have some other large companies. So we're getting into automotive a little bit throughout the week as well. So Ford, right? And then we also have travel, Boeing. And so, this is going to be interesting. And I'm actually interested to see this one here, Hilton, because I think travel is actually picking up quite a bit. And we're seeing since COVID that these hotels are kind of, doing different things. But I've noticed that it's been still pretty expensive there. So we're going to watch Hilton. Well, I'll watch Hilton for sure and see how that looks for travel. And then here we go. And this is so like going back, if you remember, right? Apple, Amazon. So this is number one and number three in the game. They got their earnings report coming in on Thursday. And so another thing here, we also have MasterCard and Pfizer. So these are all companies in the top 25. They make up a big market share of the S&P 500. So knowing them is very important. So I'll do it one last time and I'll ring off the ones that we want to just basically pay attention to, and I'll talk about the date. So Tuesday, we're talking about Google here, Microsoft, Coca-Cola, Visa. Wednesday, we're talking about Facebook, and that's Meta. And then from there, we're talking about Apple and Amazon, right? MasterCard. And then on Friday as well, we're going to be taking a look at Exxon because we know they're in the top 25 as well. And so, these companies, we're going to be able to get a good sentiment read by paying attention to earnings. And so I'm glad that we dove into that because, as I said, knowing this and compiling this stuff as far as the information is going to be helpful for our strategy and being able to see how these ebbs and flows are going to work. So now that we got a good deep dive into that, let's kind of talk a little bit more about some metrics that I've mentioned here on the channel. So we're going to talk about the NASDAQ, the stocks that are above or below their 200-day moving average, and see how that metric changes through time. We'll look at the PCC, so the put to call ratio, and then we'll dive into Ethereum. And outside of that, if y'all got some requests, some of the different things that you want to talk about, we can do that. So let's dive into this really quickly. And I don't know if you guys remember, but I'll do a brief overview of what this is and how this is set up. And then so for now, we don't need the RSI. And so we don't need the MACD. And then we'll just dive in straight to the metric here. So this is a representation of the NASDAQ. So the NASDAQ 100 stocks above their 200-day moving average. So this is on a weekly chart here on TradingView. And I have two lines here, the green line, the red line. Green basically meaning good, red basically meaning not so good. So when you see this metric getting on top of this green line or even straddling it or close to it, and we look over to the right-hand side of the screen, so we're seeing, a number like 85, right, 90. So just view this in percentage terms. And so basically saying that 85 or 90% of these stocks are above their 200-day moving average. And so this is specific to the NASDAQ, so the tech sector. And so when things are rocking and rolling, what are we seeing? This metric is straddling really on this upper portion. So 60 and above, where you kind of see like the bulk of this metric kind of plotting here on this chart. And so you do see some ebbs and flows, but I would say this is when the market is rocking and rolling, where you kind of see these arches, then it kind of settles down. And then same thing here. Like, how do you know if markets are starting to trend down? You start to see this arch. So things are rocking and rolling, right? And then you start to see, okay, it's kind of deviating, right? And this is the key, right? So you start to see this deviate from this cluster. You start to understand that, okay, markets may not be doing so well and so healthy. And so you start to see this seriously deviate, and you see at the beginning of this year, it's starting to lose its structure. And so these arches come and go. And that's how you know that, hey, things are changing and there's a sentiment change and things, fluctuating underneath the surface that are showing us that we may not be in a bear market or a bull market any longer. So for a bull market, you start to see this deviation. Okay, we may be going into the bear market and vice versa. When you see that we're not hanging around here some more, we start to get up and more, up in this period here or this portion here, then you see, okay, here comes the bull market. And so using metrics like this is very helpful besides looking at just specific assets. And so what I also have here are these green lines. And so what these green lines represent a low for this metric, so a local low for this metric, but also it also reflects a local low in the NASDAQ. And then so what it also does is at the same time shows a local low for Bitcoin. And so as we kind of looked through time, we were really looking at this portion here, and then we had that low here. So we had that, and this is on the weekly chart, but it was more so on June 17th. And so it's capturing the whole week. See if we can put this on the daily. And so I got these circles here to really help us kind of see, okay? Now we had this low right here on June 16th for this metric. And then so if we were to go back over to Ethereum chart or Bitcoin chart, we had that low of 17K and some change on this day or the day after. And so paying attention to this really helped me say, okay, yeah, I probably want to be sniping, getting some good stuff. I was able to grab some Ethereum under 900, which I was, really happy with that. I was able to grab some Bitcoin under 19K, really happy with that, and some other alts that I want to hold for the long term at a really, really good price point because of being able to use this metric here. And then so if we were to pop up the NASDAQ, so let me add that here. So let's do NDQ. We're going to be able to pop that on here. And then so same thing, what do we see? It's correlated with a local low. So if y'all realize, so let's kind of go back to that weekly chart. And man, this stuff is so good, so good. Here, let's clean that up a little bit. So we can take this all the way back to 2008, the financial crisis, and that was an interesting, unique period, which we're going to talk a little bit more about. But for example, low with the metric here, low in the market here, the NASDAQ, getting low with the metric here, got a low here, low with the metric here, right? Low here, low with the metric here, low here in price. And as you can see with COVID, here, let's see if we can make that a little bit easier to view. Cool. So let's see if I can line that up to how I had it. Forget about it. So low with the metric here, right? Low in price. And then same thing here. Kind of bring that in the frame. Zoom in, low with the metric, low in price, and then we've recovered. And the same thing, the metric has recovered as well. So price has recovered. There's no divergence. Metric has recovered. And so that is very similar to previous time where the price recovered, the metric covered. So no, I know a lot of people are saying, hey, we still got some more pain to go. And I do see the sentiment and the reasons of why that could be, right? But nonetheless, value is value. And then so anything on a significant discount, I would say you would at least want to nibble at the market without going all in, because there is that unclarity of where we're headed, especially with the macro. But being able to nibble and get good things at a good value regardless is, in my opinion, always a good idea. And so I've been nibbling at this market, especially under the realized price for Bitcoin. So Bitcoin's realized price has been kind of, anywhere between 23 and 22K. So anytime that we pop below that realized price, I'm looking at the market and I'm trying to say, okay, are we trending down? Okay, cool. Wait for things to settle down on that trend, downwards. And then, I pick my spots and I have my method of doing that. And so, as we can see in recent time, this metric has been very helpful. So low with metric, low on price. But I do want to talk about a time period that may be a little bit more reminiscent of kind of where we are today. And let's go back to 2008 and see how did this metric do and kind of show us the data through that time period. And so I kind of have this stuff here to kind of give us a nice representation on what we're looking at. So the interesting thing here, back in the financial crisis, and so look at the dates here. So we have October of 2008, then we have a time period of March of 2009. So we bottomed out with this metric. So basically saying, at this point in time, less than 1% of these stocks, so, the NASDAQ 100, so literally one of these stocks were above their 200-day moving average. So this is dire. This is pretty tough times here. So you can see this was a significant drop in price, for the NASDAQ. So it's a bottom for this metric, but it did not bottom the price because we've seen a lower low 5 months later. And so we've seen that, this metric recovered. Now, here's the thing. Still pretty low though, right? Only 13% of those stocks were above their 200-day moving average, but still an improvement from this low on the metric. So how do we kind of quantify that and understand that? And so understanding that the 200-day moving average is a moving average. So it moves, it's not stagnant. And so with that 200-day moving average, right, and things kind of recovering, there's a rapid way of that happening. So some of these, and it's kind of one of those things where it's just like some of these stocks rapidly got back, in the green, right? And still, nonetheless, not all of them. So as a sector, not all of them recovered. That kind of shows me a lot of like how crypto recovers too, where you have a certain batch of them that recover sooner, then the rest kind of come, with the rest of the market. And so, if you were to look at them as a whole, right? So looking at them as a whole, they did make a lower low. And so that's the thing about it. It took 5 months for that to happen. And so that's going to be something that I could see with the macro environment still being pretty tough, considerably where we may still be going. I would say we're still maybe going up with the Fed rate, and so the interest rate basically going up. And so we'll talk about that as well. This is something that we want to kind of see as a possibility as having a lower low. But the thing that I'm kind of excited about, right, is kind of using this metric, is that this lower low isn't that much lower, and you kind of see a bottoming formation here. So you see that bottoming formation, and then you're off. So as you can see, there was some time. So this is October of 2007, and it took 2 years for this thing to finally puke. And so if you think about Bitcoin and the stock market now, we've already puked quite a bit. And then you see a bottoming pattern off into, what's next. So you have contraction of markets, then you have expansion. There's only 2 options, right? Because as you can see, there's no just straight line across. It's either contraction down then expansion, and then the smaller contractions and expansions in between. And so that's how Elliott wave theory and pattern can kind of help you navigate that. But as we can see, there's a big difference, right, between something that looks like that, so channeling down, and then something that looks like, oh, that was horrible. But y'all get the gist, right? Something that looks like that traveling up. And so let's kind of look at time as well. So for example, and this is where the dubious speculation kind of comes in, because we see this pattern is a little bit more strung out compared to, in the past, similar to 2008. Not as long, but it's a little bit strung out in its orientation on how the chart looks. But let's say we do get that example of time where, right, maybe we bottom out with this metric, we recover some, and maybe we linger around here for some time. Because I could see lingering around with this metric, or kind of lingering around with price, being a possibility. And so we go out, right, same amount of time, it's 22 bars. What does that land us? That lands us in November. What's in November? We have the midterms, we have elections going on. And so I just try to, compile this information. Like I said, this part of it is the speculation, but a lot of this stuff tends to rhyme in a sense, and in the way that things actually play out in real life. And so it's just like, as we see the things happening in real life, we're going to pay attention to these time periods and see if they have a weight on the market, or if they have a sentiment change in the market. And so, we're seeing this recover similar to previous times. So like in 2020 and 2018, right? And even these sub periods here in 2015 and 2016, where you kind of get low with this metric and boom, you recover back into the larger portion of the metric, kind of getting closer to this green line here. And so we'll see, this stuff is pretty compelling, right? And we're not going to use this as our only metric. We're going to use this amongst other things. And so let's look at the PCC to the put to call ratio. So same thing, I have green and red. So this one is actually flip-flop. So actually the red is when things are really, really good, rocking and rolling in the markets. Green is extreme panic and fear. So if you kind of flip-flop that in your head and your mind. And so where we've kind of hit here in COVID, that was an extreme panic. So same thing here. If we were to pull up the NASDAQ, so let's actually do that. Let's pull up the NASDAQ, and you see that these red or these green lines are local lows in the market. So same thing. We're using the other metric with the NASDAQ, the stocks above the 200-day moving average or below. And so we're seeing here, we see the local lows with the green line here. So boom, local low, local low, local low. And you're noticing that is in times where we have, like I call it, like a round trip. So going from the bottom of this metric towards the top, right? So, go from the bottom to the top. And then when you get excessively outside, especially above this white or close to this white line here, and then you're touching that line, and then you're exceeding it to this dotted line, or even potentially to this green line if things get extremely bearish in a deep recession. And so we kind of zoom in here, right? We seen with COVID, we came to this dotted line and we curled over, and then we recovered. And then so the interesting thing here, if we were to, same thing here, we tapped it, right? So we tapped it, and then we did a double tap. So when I first showed this metric to you guys here on the channel, so let's get that so we can see it. So when I first showed it to you is when we were heading up, right? And then so I was saying, hey, since we're heading up with this metric and we've crossed this midline, there's a good chance that we may kind of come and touch this line. And so we did that. And then so we were here, so price was here, and then us touching this line, price came all the way down here, as we can see. So that was the first tap, and then we had a recovery, kind of came down, and then so here's the recovery going the opposite way in price. And then we came back down with the other tap. So we could put another green line, a green vertical line right here, basically saying, boom, there was a low in price. So let's change that to green. So that's yellow. We'll leave it as yellow for, this is the time period that we're talking about now. So current events. And so as we kind of go back to this midline here, this is the interesting thing. We're starting to curl back. Now, the thing is, do we curl back and attack this white line again or exceed it? I don't know. I mean, there's been times where we've done that, right? So how we've curl back and gone right back to it. And for a third time, that would be pretty interesting. But nonetheless, that's kind of, what a bottoming pattern might look like. And so we're not going to only go off of past experience, but we're going to let that help us kind of dictate how to look at this stuff. And then so here's an interesting thing right here, where you see this indecision in the market, where you have this back and forth, back and forth, back and forth. You have this BART pattern before you take off. So that is a possibility here. And then same thing here. You have this BART pattern that's playing up and down, right? And then you still don't take off, right? And it takes a while. So this is like that financial crisis period where even, people are putting more calls and saying, hey, we're saying, hey, things are going to get better. They're calling for it to get better. And it did take some time before things actually did with price. So this metric is really good for, like I said, really seeing those lows. And then also when times are, really expansive and things are greedy. So the tops of market. So same thing, for example, here, right? You start to see this is a helpful leading indicator, I like to call it. For example, here you see this extreme greed right here, right? And then so if you're paying attention to the metric, if you are investing when times are not so good, right? So like here and like here, for example, you would be in a lot of profits by the time you got to here. So that round trip, you got to the bottom of this metric. So, you had an incredible gain. So if you're looking at the chart, right, you would have been investing in times like this, being able to catch this dip. So 2011, 2012, right, paying attention in these years, right, and then, putting together a portfolio during this time. And then, right, extreme greed, probably taking some profit here, right? And then things kind of trailed higher a little bit. But this metric is very helpful for getting those, those extreme greed moments, and then those extreme fear moments within the market. So as we kind of come back to where we are today, uh, I have this trend line here. So this trend line in white, and this is kind of why I say there is a good capability of us trending back up, right? Is because we were seeing this line has been somewhat of a resistance. So we had some overexposure, right? But that's at the tips off the market. But if you kind of see this trend line here, touch point here, touch point here, and how you see this curling, right? There may be a good read on this, basically saying that we curl and come back a little bit higher with this metric. So a triple dip, and then vice versa. That means we're kind of coming down in price. So we'll see that happen. We're not going to predict. We're going to have to react, but using these indicators help us react faster compared to other people and participants in the market. That's how we have our edge of understanding and knowing what's going on. And so, those are the two metrics that we're going to be using. Same thing here. We want to see, okay, well, if this starts to kind of linger back down here, then that'll kind of show us price will follow. And so these things play off of each other, and they're pretty helpful. And so, cool. Now that we kind of got that stuff out the way, let's delete some of these tabs. Do want to talk a little bit about bond yields and the Fed funds rate. So let's get that out the way. So we're going to talk about the Fed fund rate. And so I'm going to bring up a chart that is pretty interesting and pretty cool, because I think it kind of helps us say what are the capabilities on how high they could raise the rate, and how the bond yields kind of help us see where that threshold may be. And so I know they have their projections on what they'd like to do, but we know that they pivot all the time. And so why do they pivot, and what are the reasons for that? We're going to get into that here in a sec. But let's take a break. Let's see what's going on in the chat. Is anything helpful? Are y'all kind of tracking with me? Cool. Dope. So yeah, this metric is helpful, guys. Like I've been using it for some time, and it's really helped me gauge these markets and kind of get out ahead and kind of formulate my plan and really execute. So cool. And I know this stuff is sometimes, like I said, we're looking at this same stuff, but when you kind of get familiar with things, for me, and I'm doing a little bit of extra for you guys to help you guys understand it, but for me, on a weekly basis, all I do 2 minutes, boom, 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 I see what's going on, cool. And so you really don't have to spend too much time looking at this stuff once you're fine with what it means. Boom, got me. You following? You tracking? Cool. All right. Well, let's roll. Let's continue on. And we'll wrap it up here. And we probably got like another solid 20, 30 minutes. And just gonna keep diving deep. So grab your scuba gear. Let's get it. So I'm gonna basically go over a couple things here. So we're gonna talk about the Fed's fund rate, and we're gonna talk about the 2-year bond yield. So I think I have that over in the watch list. And then so you can see as the market is opening up, we got a mixed bag. Let's see here. So the NASDAQ is down a little bit. SPX is slightly up. Dow Jones slightly up. Tesla as they open. And these numbers are going. These markets are open. They're moving. And so Tesla down. Apple's down. Netflix kind of recovering from their horrible earnings. Bond yields here, but as we can see, for the most part, crypto is down. But there's a couple outliers that we got Hex holding strong. We got Hedron, and this is I know a lot of guys aren't talking about this coin, but there's use case here, immutable code, no admin keys. These are big things within crypto that I don't know if people, when they're allocating money, if they're really focusing on paying attention to. With the smart contract, there's none of those things there. No admin keys. Up 11%. Not financial advice, but hey, there you go. Just an interesting thing knowing the outliers in the market. And you got Bitcoin right here, 21K, and that's below its realized price. We're not going to go into Bitcoin today. We're going to look at Ethereum. But overall, with crypto, what's happening as the week gets started, things are turning down. Phantom had a pretty good week on the back end, especially over the weekend, and that's interesting. And so we can talk about that too if you guys are fans of the Phantom. I am myself, and not just a fan, but an investor because same thing, product market fit, and there's a team behind it that they've actually been doing some good stuff as far as providing scalability on things coming along. So you do, you do pick you pick your projects, right? But knowing there's been a project and a product is a big thing. Um, and so that's crypto in a whole. And so we're gonna look at the 2-year bond yield. So where's that at? Let's see here. Boom. All right. So let me get rid of some of these squiggly lines. Start fresh. We'll get rid of the NASDAQ, and we're going to talk about the Fed fund rate and how these two intermingle through time. So let's do that, and we'll take off the NASDAQ. And so let's get familiar with this here. And then so a lot of the times when you hear about the inversion of yield, it is a term when people are saying the 2-year yield is going higher than the 10-year bond yield. So typically, if you're getting the yield on something, so you're locking your money up and whatever that time may be. So for these big entities or these, I would say these large players in the market where they have the responsibility of taking care of capital, they like safety and liquidity. Safety and liquidity is a term that I don't know if a lot of us really understand what it means. But basically, they want to be able to get a yield on their capital as safe as possible. And so the thing is, inflation is a big part of how this yield actually plays out for them. So why these large players in the market? And so these are institutions where they have inflation higher than what this yield is. This is a problem. And then so when the younger or like the shorter maturity yields start to get a better yield than the older maturity yield, so the 10-year, that's what you call inversion. And then so this is a fundamental problem within the market, and this a lot of time leads to market going into some type of instability. And so right where we have this, we have the 10-year sitting below. So the 10-year sitting at 2.8% yield, while the 2-year sitting at 3%. So this is the inversion. But nonetheless, what do we see? We see through time, we see this getting less and less and less and less. And guess what? We are not going back up to these levels. So for these bond yields, we are not going to be seeing 10%, 8%, 7%. This is in a 40 plus year macro downtrend. And the way that the monetary system works, it's not going to be going back up. because the purchasing power of the dollar and the printing of money. And then so basically banks getting helicopter money, and it's not necessarily them using it on, I would say, their asset side. They take it on their liability side. Therefore, they can use the deposits that they get and utilize that money to go create different loan products, and that's how they get, their interest in, that's how they stay solvent. And so, understanding how this stuff works is super important. But nonetheless, right, with this bond yield, it's perpetually going to go down through time. To at some point, it may get to sub 1% and through the next 20, 30 years. And so we see there's time periods where it kind of pops down to zero. And typically that's when the markets are rocking and rolling. And so I'm going to pop up the Fed fund rate because, like I said, these two things have an interesting way of co-mingling together. And so I'll explain why. And so we're going to put this on a percentage base. And so this is the interesting thing here. The Fed fund rate here in orange has a funny way and an interesting way of coming and commingling right with the tops of the bond yield, the 2-year bond yield in particular. And this is a weekly chart. And so the interesting thing is the bond yield will precede the hikes of the Fed fund rate. And when bond yield starts to struggle and it's not going higher, basically saying, hey, the bond yield, the treasury is, offering these bond yields, but they cannot continue to offer them at a higher percentage because people are starting to buy them. And then when people buy them, right, that's actually a good thing, or vice versa. And then so when people are buying them, that's when, right, they start to say, hey, come buy this stuff up. And you see this metric or these bond yields go up with their yield. But when people stop buying them, that's the key thing. When people stop buying them, this is when it stalls out. And then so other countries saying, hey, we don't necessarily maybe want bonds backed by the US dollar because maybe they're not trusting the dollar so much, or the dollar is losing value, or whatever the case may be. But nonetheless, this metric topples over. And so sometimes you see a crown, or like I said, that BART pattern. So we see this pattern quite often, or you see a flat where you see a peak and it comes back down. And then so this is kind of muddling around, chopping, especially within the past few weeks. It's kind of chopping back and forth. But as we can see, it's tipping out, right? And so it's tipping out right at this level here. And so this is, let's see if we can get this back on a non-percentage scale, but this is topping out right at 3%. And so this is the interesting thing, because the Fed fund rate, their target, they want to get up here to 3.75. So this is where they're trying to get with their target as far as how high they want to rate or hike the rates. And so this is an interesting thing because I don't think they're going to be able to get there. And as we've seen through time with the 2-year bond yield tapping out at certain levels, right? And so we'll fit this up. They don't exceed it, and they haven't exceeded it for 40 years. And so this has a lot to do with the national debt and how these bonds have a play with the national debt and them being able to make their payments on that national debt. And it gets to the point to where that gets too heavy to where they can no longer continue to raise the rates. Because if they do that, it makes the national debt harder for them to pay. And that's the last thing is they want is default on their debt. And so there's two ways that they get out of that. Is they print more money, or, and, because there's an or and to that, basically they lower these rates. And so there's a lot of time. So if you notice, it's either uppage with the rate or downwards with the rate. And there's very minimal time where we're stagnant and do nothing with the rate. But a lot of the time, we're seeing bottoms of markets when we see this curl over, this period of, okay, this rate's starting to go over and there's monetary easing into the system. And so as we kind of fit this back up, okay, is it going to fit back up for me? Okay, so as we fit it back up, cool. Percentage. Boom. Okay, so that's fit right there. So what do we see? We see that they tend to stop when they get close or when they get fairly to the tip part of the 2-year bond yield. And so as we can see, let's zoom in here. With this 2-year bond yield struggling at right around this 3%, and they're trying to say they want to go up here to 3.7, it looks like it's, I think they're going to pivot before that point in time. And then so let's look and see where we at today. So where we at today? So let's look at the Fed funds rate. So today, see here, and so we got a lot of news on that coming through. So if we look at the Fed fund rate, so right here, as of today, right here, 1.75. And so we go back to it. So this is a little bit lagging behind. This has us at 1.2. So we're at 1.75. So let's actually kind of draw that in. And so we're actually here. So right about here currently. What's next? And then so we're going to go over here and look at the CME projection and say, okay, well, what's next? And we'll start to plot this out and see, okay, we're getting close, right, to decision time for the Fed. And who knows, they may be doing something different than recent time. So let's fit that up to about 1.75. So right about there. Okay. And then so same thing with this metric. It gets very close, or this bond yield. Very close. And so what we're going to do, we're going to come over here to the CME and see the projection. So CMEgroup.com, and we're basically to the 80th percentile, thinking that we're going to go to basically 2.25 or 2.5. And so that they give both, right? And then obviously the effective rate is to the top end of this range, so 2.5%. There's a 70 or 78% chance that that's probably what we're going to see. And this metric and these projections have been spot on, especially in prior months. And then some people are saying, hey, there's a chance that we may get a whole point. Only about, so if you're looking at 100 people, 8 out of 10 people are saying we're going to get 75 basis points. And 50 basis points isn't even on the docket. And so, they're still going pretty heavy with that. But with another 75-point interest rate hike, what does that look like? So we come back over here. And let's fit that up. Okay, this is bugging out on me. Here, let's fix that. So let's fix this. Okay, cool. So with another 75 basis point hike, that brings us here. So with this metric stalling out, right, we have our next meeting in September. So after this one here on Wednesday, we have our next meeting here in September. And so we're skipping August. So this is going to be interesting because that's going to allow the Fed to get a lot of data, extra month of seeing data come in. So seeing how GDP is going. And so we're going to also get that information on if we're in a recession or not towards the end of this month as well. So there's a committee that lets us know that. And so we'll see that. And, if we're looking at the way that things are looking, the sentiment, but so use your eyes, see what's going on in your real world, but also with the data, we're looking like another quarter of negative gross domestic product here in the United States. And then so by the term of recession, that is the definition, 2 quarters of that. So we had last quarter, Q1 of 2022, not so great. We're negative. Looks like we're coming up on another negative quarter. And so here's the thing, as we continue on, we're supposed to have 1, 2, 3, 4 more hikes. It's going to be very interesting when we get here. And if we start to basically not hike so many basis points, the market will actually start to see that as a win, in my opinion. So we do something less than 75 basis points, or they pivot. So A or B. I think towards the end of this year, we may start to see some structure change within the markets. And like I said, we also have some macro things going on here when it comes to the power change, right? That battle politically here within the United States with midterms coming up. And so this is interesting, right? Seeing that we're getting close to decision time. And as we've seen for a very long time, that's been the case, is where it comes to the top, we're fairly close, and they start to change regardless of where inflation is at, because inflation will no longer be the issue. The larger issue, things within the monetary system will start to break if they start to push this too high above what the bond yield is. And so that's going to be interesting because they got a lot of things to handle, like the national debt. And, and we can talk about that in another stream, but these are things to pay attention to. And so last but not least, let's jump into Ethereum. And so I got some things here. Let's make it easy to read first and foremost, and then we'll dive in. And so, I think like as we kind of see things open up and we got a big week, right? We're going to see how these companies do. And so here's the sentiment read on the companies. So these large companies, if they come out and they're not like ragingly good with their earnings, right? Expect some sideways action. Now, some of these top companies come out and say, hey, we're actually laying some more people off, or hey, here's where our revenue was for this quarter, and the next quarter is not looking so great. They start to say things like this, especially when we start reading these articles and looking at the underlying things going on. Expect some downwards action, guys. Just expect some downwards action, and that's going to have a big bearing on the stock market. So Bitcoin and Ethereum, they're highly correlated. And so the thing is, I was able to get a nice swing trade here by, like I said, accumulating. So I was able to pick my spots down here, and we got the algo up thanks to Charlie at Cultivate Crypto. We got the algo up, so utilizing the algo. So we got a couple buy signals and confirmations here and here. And then so that was when Ethereum was, 1100 and below. And then so we had a nice breakout with some news on the merge and but overall, like if you look at the structure of this was like the NASDAQ recovering as well, right? And so, was able to scoop up a lot of good Ethereum for the HODL bag and for the swing trade bag. But me personally, I started to offload up here because I start to see this stall out, right? So same thing, you see a BART pattern a lot of times like a wave. You come rushing in, then you come rushing back down, rushing out, or right, you find some type of support and you trend higher. But let's get orientated with some of this stuff here. So looking at some things, you see that we have some resistance here, right? You have some resistance right here, and that really lines up to where a lot of volume was right above it. And so if you kind of look at that volume profile, you see a lot of, a good amount of volume here with this chunk. And this chunk of volume right here was really formed within this last week. And so this wasn't really here. There was a big crevasse between this set of volume and this set of volume. And through time, people have been buying this area up. And then so the major support is right here, right, sitting right about $1,242 for Ethereum. And so we're gonna see, because I think there's a good chance that we do kind of come back down and test this area again if we get some bearish news, some bad earnings for some of these companies, or some subpar earnings, and the market said, okay, cool, we rallied, we're still in a bear market, let's continue to tread down. And so that's what happens in bear markets. Things maybe not have pivoted completely because there's still a lot of things going on in the market on a broader scale outside of crypto that are keeping the crypto prices from transiting and heading higher. And so same thing, right? This is a bear market, what it looks like, and it can fool a lot of people. So getting to know the orientation of how they work, you have extension down, some rebound and recovery, then another extension down, rebound and recovery. We'll see how long things go, but extension down is in the cards potentially, especially in the macro. And so this is how the markets ebbs and flow. And so same thing, we are to zoom out, look at the volume profile. Like I said, you see that ledge of resistance right here, sitting right here, anything in between that, like, that 1700 and that $1,800 Ethereum, there's that resistance. And then where the support is this level here, right? So you can see the volume profile is also lining up right here where the price action peaked out before we broke out. So that's where we'll have support, and then there may be opportunity to make some decisions. And so if we're looking at the RSI, so this is on the daily chart, we're starting to topple over. And so you see the moving average a lot of times when we eclipse that moving average. So for example, like here, so when we eclipse and we start to go below the moving average, price trends down below it as well. So like here, and so where we're coming up, here's the decision time. We'll see if we can hold, use that support. But a lot of times when we get high with this metric for RSI, we go below it and come a little bit further down. And so that's kind of, the picture that we're kind of painting and looking at. And so there's no guarantee, we may rock it up, right? And so I'm just giving you guys a probability, because I'm gonna sit here and say I'm gonna predict, hey, this is going to happen. All we can do is look at probability based upon the data that we can compile together. And so I have a couple of levels here, and these levels are for a reason. And so you can kind of see the pockets of liquidity right here, and then another pocket of liquidity right here. But also, this coincides with the Fibonacci count for Fibonacci retracement. So if we look at this move from here, that impulsive move from here to the top, we do a Fib retracement. So we're on the daily chart, a Fib retracement to the top, right? And you can kind of see a couple things lining up here. So we're going to get the top of these candle bodies here. And then and you could look at it a couple of different ways. You could look at it in terms of top of candle body or top of wick, right? So we'll do a top of candle body for now. And then so the area that I'm saying, hey, we want to look out for is actually kind of coinciding a lot with this 0.236 level. And then so if we start to break this level, so we start to get below like this 1480, basically look out below. And so the next fib level is this medium pullback, right? Which is, pretty normal within crypto. So for Ethereum, that would get us right down to this 13 and some change. And then so for the average pull, or I would say for like a more extensive pullback, so the median pullback right here, 13 and some change. The little bit more extensive, but very, normal in crypto, is just coming back down to this fib level. And so this is the golden ratio, 0.618. And so that also coincides with, like I said, that ledge of volume with the volume profile. And so this stuff helps us out when we have confluence, big word there. A lot of people use it. I like it. It makes sense. We have confluence, then that helps us understand, okay, hey, here is kind of a little bit more probability towards where we see this confluence. So nothing is set in stone, but here are the levels in Fibonacci. I mean, Fibonacci levels are great, guys. Like, they have a funny way of the price being attracted to these levels. And so since we have these levels here, we're going to pay attention. And so for me, I'm going to be looking for us to hopefully get to the bottom of the RSI on the daily, right? And then maybe pick another spot to start accumulating some Ethereum. And that's if we come down. And so it's looking like we're leaning that way as we open up at the market. And then so another thing that I use to help me is looking at the futures market. So we'll look at the NASDAQ futures. So the minis, or let's see, we can look at the NQ, but we'll look at the MNQ for the minis. And we kind of see what's going on there. And then so we're in this range, we're in a parallel channel, but we're starting to topple over. Same thing here. So this is the futures market saying that, hey, they want to kind of hedge to say that, we're coming down, and they're getting a lot of they're getting a lot of things going here. And so from the ask and the bids, there's some shorts in the market coming in. And so we also see that as well with the PCC. And so same thing here. We have a bit of a ledge here. And so, we'll see if we kind of settle right here, or we break below it and come to the bottom of this parallel channel for the futures market. But we go back up to Ethereum. So if we go back to Ethereum, all that stuff helps us. So let's actually dive in A little bit closer, we'll look at the 21-minute chart. We'll turn the algo off for now. And then so here's the thing of why I have this line a little bit more specific spot here, this white line here, because like I said, we're looking at in a tight group. So recent price action, we got a lot of good recent price action in this channel. So the biggest thing here for me, buying down here at 1,000, taking a little bit of profit for that trading bag, which was great. And then since here, for me, there was no need to try to accumulate more because this is indecision here. You're basically going back and forth from the top to the bottom of this metric, or not, I'm sorry, of the price action, not a metric. So straddling up and down with the price action, and it has not declared yet. And then so since it is not declared, it's looking like it's going to tap on this door to go downstairs a little bit, right, to this next batch of liquidity. So the next batch of liquidity lines up with the fib levels, right? Same thing here, next batch of liquidity. So if we scroll over right here, lines up with the fib level. And so when you dive in deep in this closer look, you can kind of get an idea of, why these fib levels are important and why price gets attracted there. And then so we're in this area where we stepped up, stalled out, and then so same thing, right? When you have that BART pattern, like a crown pattern, boom, 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 knocking on the door, we'll see if we fall through. And so I think there's a good probability that we may, especially on Wednesday, once the Fed says, hey, we're going up, that means liquidity may dry up a little bit more. And so, this is kind of what happens. And leading from the Fed, I would say leading from that Fed kind of price hike, we see the markets get flustered. And so we'll see whether they go up or down. And so, that's kind of what we're looking at here for Ethereum. I think there's going to be a good chance to be able to accumulate. But in my opinion, accumulating Ethereum under 2,000 for the long run for the HODL bag is great, guys. And so, if you're looking at crypto now, if you're paying attention, you are going to be the people who get the biggest benefit 2-5 years from now when we're really in the thick of a really, really nice bull run, right? And so you're really able to accumulate a lot of these coins. As we know, Ethereum is heading to a deflationary period if the merge actually comes out. And so that's the key thing, getting an asset that becomes scarce, that has use case, product market fit. And so there's a lot of economic energy on Ethereum's chain, which, that's something to really pay attention to. And so I'm going to spare the classic technical analysis because we do talk about that all the time with the RSI and the MACD and all this stuff. But long term, right, what do we see? Ebb and flow, up, retraction, up, deeper retraction, because, with a lot of up like this, incredible gains. And I like, taking a look at incredible gains because this is what crypto is all about. Look at this. I mean, sometimes you're like, can you believe it? Believe it, this stuff is real, right? So this is 273,000%. So if you want to work it in terms of X's, that is 2,732%. I'm sorry, 2,732x on your money. And that's being invested early on. But same thing here, if you were able to catch a dip, right? Understand the market. That's what we're doing here, right? Boom, right there, low on the RSI. If you're able to catch this, accumulate, and you don't got to get it perfect. Anywhere in here, accumulate. Hey, you say, oh, hey, we had another opportunity. Accumulate. So if you go here, top of the market, and you start to slowly DCA out, and you ladder out, some of your profit looked like this, where you were able to get a nice 30x. And some of it, while you DCA it out maybe a little bit sooner, maybe you got a 13x, right? And then but learning how to take profits when you have them is a big thing. Not trying to get this stuff perfect is a big thing. And so, because nobody ever gets it perfect anyway. And so, but the reason why I wanted to zoom out a little bit, because as we see, trend up and to the right through time. And that's what we want, an asset up and to the right, and not like the dollar's purchasing power, which is losing purchasing power every single year. And so, yeah, you guys, that's pretty much it for the day. Hoping that wasn't too much information. If you guys are feeling like it's too much, the only advice I can give you is basically watch more videos and just give it time, and then you let this information soak in and you'll start to understand it the more that you watch it. So that's kind of how this stuff goes. Nobody's going to give it to you. Nobody's going to say, hey, here's how you do every little thing. Nobody's going to come and basically invest for you. This is a game where you have self-sovereignty over your own funds, and then so you got to learn how to do that the right way. And then the way you do it is by having confidence. So if you don't have confidence, I would really say, honestly, real life advice, if you don't have confidence in what you're doing when it comes to money, probably shouldn't be doing too much with it, right? Larger sums that you don't have confidence with. That's how you get wrecked. And so I want to help people from not getting wrecked. So basically giving your money to stuff that you shouldn't be putting it into, warning people about things that that are happening that don't look so great, but then also saying, hey, here's where opportunity is. And if you can see where opportunity is, then that's another great thing to have in your toolbox. So I think we're in that phase of where we got some opportunity. So yeah, I agree, man. Life-changing time during this period of time. And so time is a big factor. How you utilize it is important. So we're going to be utilizing it to our benefit by learning. So do you have to tax? So I think let me try to rearrange this. So do you have to tax on your own crypto, or do they tax you when you take profits? So if I kind of understand what you're saying, so you get taxed on your profits. So if you do not have a realized gain, you do not get taxed. So for example, if you're holding something and then so there's capital gains tax, typically if you're holding it less than a year and you have a profit on that principal, then you're going to get taxed whatever your taxable income is. So wherever your tax bracket is, that's where you're going to be. So and that's dependent on your jurisdiction. Now, once you are holding an asset more than a year, then you get dropped down to 20% tax or 15% tax on that profit. And then so that's why we encourage a long-term HODL bag, because you're going to be paying less tax. And so that's how taxes work. I know there's some regions across the world where there's no capital gains tax. And so if you're in that region, you got the benefit. And so everybody's different on that when it comes to tax. Cool. And how to create these metrics in TV. So in TradingView, pretty simple. So in TradingView, let me see. I'll go ahead and post. Let me see. I'll post them in the chat really quickly. So I know I can post the Nasdaq one in the chat really quick, and the PCC. I can. That one takes a little bit more effort to create that, but I'm gonna give you guys this one in the chat so y'all can track this one right away. Let's see. Da-da-da. So on TradingView, the ticker symbol is NDTH. So boom, if y'all are wanting that, there's that. Cool. Let's see here. Cool. I'm glad. I'm glad. So bookmarking this for notes later. Yeah. So take your notes. I take pride in really trying to pinpoint this stuff and seeing how it can help us. And so I know it's helping me for sure. And yeah, guys, like, this is good stuff here. And so if you guys haven't already, tell a friend to come join the group, right? Have them come watch. And what I'm gonna really do as well, I'm gonna give some simpler videos. I know some of these things can be very extensive. I'm gonna dive into some simple things that we can kind of say, okay, how can we actually make money in crypto? Like that's the biggest thing. Like how is the money made? And really start talking about that. But really, I want to also kind of get people to learn, especially when they're first starting, maybe not worrying about the dollar amount so quickly, but really trying to accumulate more of crypto, because these are the assets that raise in dollar amounts when there's liquidity that comes back, when the markets start to kind of get more life. So right now we're in a time period where there's not much life within crypto. Like a lot of the short-term holders are out of the market. And so this is where the opportunity is, because the short-term holders are basically locking in those losses and giving their coins to the hodlers, the long-term holders. And we know the people who make the big bucks in crypto are the long-term holders. But like I said, there's ways to accumulate more coins, or if you're trying to accumulate, a little bit more change here, no more cash. If that's your prerogative, there are some swing trades that we can do here. And so, I can talk about that stuff a little bit more and some more altcoins that have like that leverage position versus Bitcoin and Ethereum that get the higher gains in a short time span. So, we can talk about a little bit of the money making here too. And so, yeah, guys. So that's all I got. That's a recap of the market. So we got some things coming, right? Tuesday, Wednesday, Thursday. Wednesday is the FOMC meeting. So really looking forward to that. We'll probably do a live here. And so, yeah, we'll keep chugging along. And I hope this is helpful information. And until then, peace.